know if you hear it. Hey folks, I'm testing. I've still got some technical problems here. Just want to see if you can hear me speaking right now. And see, I can't even see the stream. I can't see any of the stream data, anything. Okay, hang on. There's it. Hey folks, we're just going to go forward. I'm sorry about this. There's something really messed up on this side. It keeps giving me bit rate issues. I've checked my stream, so this is very frustrating. We're amateur hour here on YouTube, which something got messed up on OBS last night, so I'm not sure what's going on. But if you could just, Jay's got my back. I can't see the stream. I can't see any of the comments or anything right now. So let me know if you are hearing this, and Jay will confirm that with me, and then we'll just kick off and we'll pretend this never happened. Are you hearing me? Okay. Okay. All right, folks. I have no idea what's going on with this res issue. I've got some warnings on here. Never had those before. Use the same settings. So let's go ahead and get going here. I mentioned right before we tried to start 20 minutes ago that we did see some selling coming in. Markets bounced back to go positive. There's a couple of things that I want to cover, and I just looking through some of the comments on the channel and things people are asking. I want to cover a number of things before we get going here, but some folks seem to be. I'm going to pop up another screen here. Some folks seem to be saying that we're in a secular bull market, and I actually don't believe we're in a secular bull market. What I was talking about on Sunday's broadcast, as well as the last couple of sessions that I've been talking about this, is that we're talking about the secular chart. So a secular chart to me is the monthly. I have it on the screen here, and this is just the overall configuration on a secular basis. And if anything, we are seeing some positives. We still have underlying trends that are still positive. So, and technically speaking, we are still in an uptrend. We've rebounded very quickly after spiking down back above all the averages that I use, 10, 21, 40. Let me just see if I can add something here real quick. What I'm going to do is add the ppms back in here. I just want you to see that. There they are. What you'll see here is that ppm1 is at a 0.58, ppm2 0.72, ppm3 0.71, and these are all upward sloping trends. They've been pretty static all the way going back to 2018 after the little spike there. They didn't change then either. In fact, we traded down to around the 40 period moving average. And if I were to put up a 200-week moving average, you'll see the low in 2018 in that fourth quarter was exactly at the 200-week moving average. And we got that huge bounce off of there. Now, this time we traded through everything in this volatility spike. I guess when you shock the market and turn off an economy, this is what it looks like, and then you turned it back on. And what we're seeing here is we had one of the best economies in the world, the entire, and then we turned it off, followed by turning it back on. So it's not going 120 like it was. It's now going 70, 60 maybe. But the perception of what's going on is what's important here. And I made a note to myself that understanding the current fundamentals is more important than understanding what the fundamentals are, or understanding the interpretation of the current fundamentals is more important than understanding what the fundamentals are. And what I mean by that is that the fundamentals are broken, they're being repaired. I've been going on and on about how we continue to get a better than expected reports coming out. Everything, whatever the economists are thinking we're going to get is better. Better means it's not as destroyed as it was. And, you know, look at employment numbers that came out last week, much better than expected. I've talked about maybe the books are being cooked. Doesn't matter, but the interpretation of these is what does matter. And I think people mix up the market sentiment with some sort of reality that these numbers are reality. Remember, every economic report we see or hear about is looking in the rearview mirror. That's what already happened, not what's happening now. And so the markets are forward-looking. We all know that. We've all heard it. I've watched it for 40 years. They do look forward to a point, and market sentiment continues to be positive. That's why you see a crazy 1 hour sell-off like we had yesterday, and then the market snaps back, and we traded as high as 31.71 today. And it just bounced right back. And in fact, the whole move yesterday was a no big deal. And I talked about this in the live stream I did last night. There's just nothing out there that is going to derail the underlying sentiment, which is the economy is coming back. We're continuing to go on. We're seeing 1 million stories a minute about coronavirus and how the most populous states, Florida, Texas, California, are seeing increases. And, you know, the perception is we're all going to die, but the markets don't see it that way. And I've talked about this a lot. Listen, I'm not saying this isn't a real disease. I'm not saying anything like that. I'm just saying that the news media, somebody last night on the live stream made a comment that CNBC wants the market to go down. And I believe they do. I believe they would love it to go down. Well, and anybody can figure out why they might want it to go down, but the realities of what's going on in the economy is that we are coming back. People, listen, Arizona was one of the spike states, and right now they had 60,000 people or something are tested positive. The fact that you're tested positive maybe doesn't mean you're going to die, right? There's that many people would go to a college football game tomorrow. It's not material, but I understand how they're utilizing this information. And not, we shouldn't be. I'm just saying we're going to be cautious. We're going to do all this stuff. I'm just glad they didn't report on H1N1 last season, because there were 62 million people with H1N1. That people have been jumping on the windows that they heard that. But the bottom line is, this is a narrative that is driving the markets. I can look at the channel and see a lot of people talking about it. This is a good environment for a crash, coronavirus. The coronavirus scare is behind us. And behind us from this standpoint, not that it won't reemerge, let me make this clear, is what we're really seeing here is that folks want to work. They want to go out and be functional in society. There's only so much you can do to keep that normal human habit from happening. Everything, those of you that have studied, read, done anything about Elliott Wave or anything like that, it's about market psychology. It's about human psychology. Everything we're seeing is human psychology in prices. And people want to work. Jay and I are both here in Arizona. I guarantee you, if you go out on the streets right now, there are a lot of people out there. And there's 4.8 million people in Phoenix, Arizona. They're out on the street, they're going to stores, and they're functioning and going to work. So, I'm just saying that is the underlying market sentiment. And despite of some of these stories, and I think if the mortality rate were to rocket, then that would certainly warrant more of a response. So I don't really like to talk about this coronavirus, because I know people, I'm not a denier, so don't call me that. I'm just telling you, this is the narrative that the algorithms and everybody is picking up. But when you go back to the secular trends here, the longer term trends are still up. And I painted out a really good story the other day on what I think is going to happen here from the standpoint of this pattern that you see on the screen. I still believe over the next 2 months, maybe as many as 4 into the election, I think we're going to see this thing move higher. Will it be manipulated by the Fed? I saw that the Trump administration is trying to put $1 trillion package together right now. It's really, really interesting. And I mentioned, I think it was on the WaveTech meeting the other day. There's a video out there, and I'm watching, and it's taking forever to get through it because it's very informational, and it's talking about the power of the central banks and what they did in Japan post-war and what's happened all the way into the 1989 crash. And I mentioned this. One of my more famous moments was in '89. I actually basically called the top in the Japanese and the Nikkei Dow, and I did it in front of about 600 people at a big conference, and everybody thought it was really cool and that I was a wizard. But it was very obvious what was going on then, that there was a problem. And not only did that happen, but it was right around the wall coming down. There was a lot of, it was before that. The wall coming down was before that, and then it was this big monster move in the Japanese. So if you go to YouTube and find Princes of the Yen, watch that. Right now I have almost 3 pages of notes, and it's triggered me to realize what's going on with our current crisis. And sometimes governments, there's nothing better, you've heard this before, nothing better than a crisis to manipulate the public, to change, do structural change. And we've heard this going back to when Obama came into presidency, that it was fundamentally about to change the United States of America. Never actually explained what that meant. But the way that, if you look at history and the way that these things happen, is there's always a crisis of some sort. And whether it's a bubble, whether it's a pandemic, no matter what, you can see these things. You can go back, to the Spanish flu. You can go back to World War I. There's all kinds of things that happen around these events. And this situation with the pandemic and what they've done in manipulating everything is possibly the beginning of something. And I'm going to be doing a video on this. And I'm sorry to get down this trail a little bit here today. But I think it's important because it goes back to the statement I said, understanding the interpretation of the fundamentals is more important than understanding what the fundamentals are. What they are is terrible. What the interpretation is that they're going to get better. And we're going to be heavy in next week. We'll be talking a lot about earnings and other things and start to bring in that perspective. And I think that will be important. But the expectation, if you didn't see it, watch the video I put out on Sunday. Watch that again. If you're watching the live stream, I can't see how many folks are on, but the bottom line is watch that video. I went through detail in this particular situation. All right, so let's go ahead now after my little rant. But this is, I think understanding market sentiment is important, and it's always within the context of what I'm looking at. And a lot of this stuff, I absolutely love this channel that we've created. I think we've got over 16,000 subscribers that have been organically grown, and I get a lot of insight. There's some great comments on here, so keep commenting. You don't have to agree with me. I love the debate. So just do whatever it takes to continue to be part of this community. Like I said before, I don't care if you disagree with me. Don't call me names. I will, you can't call me names and curse me out. I'm sorry that you're not happier in life. But the bottom line is I want to have the dialogue, both positive, negative. It helps all of us a lot to have that type of dialogue. So as we look at the daily graph here on the S&P, I want to bring up the market grid because this, though I know there's a lot of folks using this, I'm posting it on the website. I am working diligently in the background to create a access to this grid. And not only is the grid on the S&P, but it can be generated for any one of these symbols. And those of you who watch the live streams, and we'll look at them here in a few minutes, you'll see exactly what I'm talking about here. But I want you to look at the high for today, 71.80. 71.73 was R3 today. So we actually printed R3. Everybody, I saw a bunch of comments last night that, the market's going to collapse today. No, it didn't. The low, 31.36.53. I want you to look at S1, 31.36.68. So far, maybe they'll retest that, but that was a spot-on hit of the S1 R3. Last night I was talking about a possible R1 S2. We never got there. We just blew up through here, and it has everything to do with the market sentiment that I just talked about. The sentiment is very important from the standpoint of what that underlying bid, what the action is going to be as we go through these markets. But this was exactly what I did talk about last night, is we're going to remain within this grid. You can look at all of the bars on this chart. Very seldom do we get outside of this grid. There are spikes and there are things that have happened, especially if we go back into March where we had absolutely crazy volatility. We're having 1,000, 1,200 point up and down days on the Dow Jones. It's going to blow up any metric that you can throw at it. But in reasonably normal times, you're going to trade within this grid. And this is a great guidance. And as we go out and look at the weekly, you're going to see we're trading within the grid on the weekly as well. 3169.84 was the R1. I talked about this on Sunday's video and possibly on Monday night, is 32.14 is still my target for this week. I think we can still get there. This consolidation that we're seeing right now is likely to still resolve itself to the upside. Markets want to go higher. Maybe we retrace back. I don't think we see 30.90. That would surprise me if we saw that. But it's certainly within the context of the grid on a weekly basis. So an S1 is possible, and R2. So that would be the extreme. I think the fact that we've traded this far and it's Wednesday, that we're not going to see 30.90. It will probably continue to move back up. The high so far has been 31.84, which we printed 2 days ago, and this grid will dominate. And as we go just one more step further here, as we start to look at the monthly grid for July, you're going to see, I want you to notice where R1 is. 31.82 is, let me make sure I got the right number here. Yeah, R1 31.85.01, high 31.84.15. So we're R1 on a monthly right now, and the low has been 31.01. So we're nowhere close. S1 is 30.15. I don't think we get there. If anything, we'll probably, if we don't get above R1 this week, we will get above R1 next week. And I want you to look at these numbers: 32.79, 33.74, R2, R3. This is for the month of July. And these numbers are likely to be hit this month. And we'll call it a summer rally, maybe, but I think it has more to do with posturing of the administration. It's an election year. Election years tend to trade like this. We've got stimulus everywhere. And when you do watch the princes of the yen, you'll see exactly what's going on here, which is massive amount of new currency being created. I've talked maybe 2 months ago now, maybe 3, about the debasement of the U.S. dollar. Well, the U.S. dollar is not depreciating. We'll bring that up in a minute. It's not getting a depreciation like we've seen a lot of times when you expand the currency like they have. The Fed blew up their balance sheet, right? $3 trillion. You've seen trillions of dollars of stimulus. So you have fiscal stimulus and monetary policy working hand in hand to float this economy. You can call it a bubble. You can call it anything you want. It's working at the moment. Maybe it doesn't work long term, but it is certainly working at the moment. And these type of actions, they're talking about loading this thing up another level. They might, as long as the U.S. dollar stays reasonably stable during this time, it's going to cause some very interesting effects in the economy for longer term. And that's if the dollar does get debased and all of a sudden the value of the dollar just falls out, then that's a whole nother scenario. We're going to look at the dollar in a minute because I'm on this little rant about all this stuff that I've been looking at. And this is really important to have the context of, from a longer viewpoint and what's going on in the economy, and getting out of the daily news line of the coronavirus, and we're all going to die mode, into what's more likely, which is the longer term structural changes in the economy. The whole thing, and I can't wait to do this video because I've got some great thoughts. Some of this is some of the things that I've already been researching. And those of you who watched the channel for a while, I believe there's a video I did, might have been in March, maybe very early April, and I called it Unintended Socialism. And that's what we're seeing. We're seeing a restructuring potentially of society through social distancing, from maybe universal income. I don't think these payments that the government's making to people are going to stop. It's almost like they've put the line out there. Now they're going to have a hard time to stop because there's a lot of folks that have been dislocated from jobs, and most of those folks are in the lower end of the economy or lower end of the wage. And obviously that's one of the big dialogues going on out there with the imbalances between the rich and the poor, right? That's the big dialogue out there. So I wouldn't be surprised if you haven't seen the beginning of universal income. We'll see what happens there, if they can find a way to restructure everything. But also, this whole thing that we're seeing here is possibly a restructuring of the political elements as well. And there's just anybody that reads anything on the internet, looks at anything, can see all the stuff I'm talking about happening. But when it comes to this market, we're going to see, I believe, a continued bias into the election, and then after the elections, anything possible. See who wins, see what goes on. If Biden were to win, he's already telling he's going to raise taxes. They're going to take everything Trump did away, and that's going to, I'm not saying it's good or bad, it's going to be different, and it's going to be restructuring. And this is a dialogue, you folks just met me in the last few months. This is a dialogue I've been talking about since the 80s, which I started, you have to remember, right in when Ronald Reagan came and took the Jimmy Carter taxes off and changed everything, and we went into a major bull market in 1981, 82. I was there. I watched the tax changes. Then I watched in 86. They changed taxes again. Every time taxes change, it changes how the markets act. And if there is a big tax change again, that's going to change how the markets act. I don't know if it's positive or negative. It could be either way. I'm not making a judgment here. It is the fact that it will be different. So I think sometimes I get on these things. I have to get this stuff out of me, and it's a good venue for me to do that. Just wish I could see the timeline so I could see what you guys are saying. I absolutely am blindfolded here at the moment. Yep. All right, folks, so let's move on. Let's go to, since I ranted about the Dow, let's go over and take a look at the Dow. I brought up the daily Dow chart, but the only chart that matters that I'm talking about here is the monthly time frame. So we want to go long term, and this is the one that matters. We are seeing some weakness, but we have a couple things to look at here. One is the 40-month moving average, down at 93.50, we'll call it. We've got some support here. Basically, the Dow is flat and stable. I don't, at the moment, see it entering into a major bear market. The extreme will be down toward the grid again. Let's bring up the grid so we can see that. This market grid that I keep bringing up, this is such an amazing context of where the markets are likely to move on multiple levels. I could take this on a 1-minute graph and do a grid on a 1-minute graph. But when you start looking at daily, so you can really target the daily expectations, those who've been watching the channel know that this works really well. Combining that with weekly and monthly movements, this says the same thing again. If you can see here, The grid, the low so far 96.35. The S2 is 96.09. So we're getting down toward the July S2. Maybe we go as low as STX. We'll just have to see, which is the 94.84 level. I don't see us getting down probably much below S2 for this month. Well, we should see some stability based upon, now we start to work our way down, and we'll go to the weekly. And you can see we're getting down toward the lower end of the weekly. Right now, the low 96.34, S3 96.35, so we're trading S3 as we speak. This is probably the extreme. You see PPMs negative, but turning up on PPM1. PPM2 and 3 are still negative. This also points out, you can see the 200-week moving average. Maybe we trade down to that level, which would be an extreme of 93.78 right now is that value. You know, that's only about a 2 or 3% drop. To make this thing blow up with all this new currency that's been thrown on the street is going to take a 10 or 15% move in the Dow to really throw the markets into chaos. And at the moment, it doesn't look like that's likely to happen. We're going to go down to the daily now. And dailies is very flat, basically trendless. We've been that way for weeks. This way, we do a top down. We started monthly, weekly, now daily. You can see PPM1's turning down. It's actually crashed through its first and second derivatives here. PPM2 is still above first and second, and PPM3 is looking like it's trying to bottom here, which suggests to me that we are likely to move ultimately back toward the 200-day moving average, which is 98. Let me make sure I've got the right value here. Yeah, 98.08. So the range is probably where we are now, going to all the levels that we just looked at the grid. So 96.09 was one of the grid numbers, and that's probably going to be the low. 97.32 is the upper end of this range, but probably as high as 98. So I expect this thing to continue to consolidate at these levels. All right, it would only make sense to go from the Dow to gold, and gold continues to act well. I talked about this the other day. If we closed above the 1808 level, that we would start to move toward the 1837, 1842 level. You see we're getting this continuation. PPM1 is 0.25, 0.26, and 0.13 PPM 1, 2, and 3. The PPMs, for those watching that aren't familiar with that, is price pressure momentum. It gives the angle of attack or the probabilities of the underlying market going through certain values. And these values, PPM 1, 2, and 3, track the 10, 21, and 40 period moving averages. So these are what this is telling us right now at a 0.25. There is only a 40% probability to decline below that number. Let me bring that up. So the 10-day moving average, 1791, that is moving up at about $5 per day. So we're going to be 1795, 96 tomorrow, and so forth. So that's going to be your support line. If you were to see it trade down there, it's a buy. We should go to 1840. Let's go to the weekly and look at the grid on the weekly just to get a perspective here. We're trading up at the top end of that. This was numbers that I talked about on, I believe, Sunday night. Was 1821, 1832 We've already seen a 1829 high, so we've traded right into that R3 to the extreme of 32. So we're printing the upper end of this range as far as gold goes right now. But as I said, 1796, we'll call it right now, as major support. That would be your downside. It looks like this thing wants to continue to move higher. We're going to go to a monthly grid here just to get a perspective from that. A monthly grid is going to give us some more upside here. This is where I got the 1834 level, which is R1. Above that is 1872. That's a little far-fetched, I think, but it's possible. I believe that gold is being looked at as a hedge right now, and there's a lot of interest in this trend. If you were to go all the way back to 2019, I don't know, some of those videos I cleaned up from the past. I used to do a weekly, just once a week, and it was primarily for our customers. But the bottom line was, I've been a bull on gold for a while, going back, into the way back in the 1500s, and this is a continued part of this trend. And I'm going to put on some Fibonacci objectives just to see what we have out here right now. So there's no current Fibonacci's that are out there, but I want to back up because we're on monthly. I want to go back to the weekly here, just see if there's something out there. Yeah, these are, you'll see it on the window that I just clicked on. The high target right now, Fibonacci wise, and this is probably for the next 12, 18 weeks, is 1989, 2108, 2182. So these are big numbers. We'll call 1989. Let's go to the daily and just see if there's some shorter term stuff out there. There's not right now. So there's no patterns that have been picked up. The way that these numbers are being calculated have everything to do with everything to do with the patterns. I built, there's a pattern recognition tool inside of our logic, inside of everything we do, looking for patterns and expectations, forward-looking expectations. There's nothing on this pattern here, but the weekly is giving us these numbers I just showed you right here. And this is brand new. This was as of this week. 1989 is that target. So that tells us what, 170, 150 bucks on the upside. So these are big numbers. All right, I think Jay's going to have to give me some of the questions and stuff. I think I've covered everything. I'm going to bring one thing up before, then we'll just go through. It's just frustrating as hell. I'm going to also take just a second break, and I'm going to see if I can at least get the comment line in, because that really helps me when we're doing this. So you'll bear with me in just a minute. I'm going to take just about a 1 minute break, and then we'll go into questions. Jay, I know, has got a bunch of stuff. He's in my other ear, and we'll be able to go through a lot of these questions here in just a minute. So bear with me while I try to get something up. Okay, I actually figured out how to get the line up so I can see some of this stuff. Jay, why don't you tell me some of the things that are out there, and we'll go forward. What do you Okay, so now that I can see the line a little bit here, Jay was just bringing me up to speed. Yeah, so Scott, this is not the WaveTech tool. This is TradeStation with WaveTech. These are WaveTech tools and indicators and everything that are going to be available on TradeStation. Yeah, so Scott, sorry, we had trouble with getting this thing to broadcast in HD, so we just went ahead with the broadcast. It was already disrupted everything. So, yeah, somebody mentioned back to Brenton Woods. Maybe, huh? Let's. So if you guys are listening, let's give me if you have some bank indexes and things that you want to look at. Let's go look at some of the maybe some bank ETFs. If you have anything out there, let me know. Yeah, Samuel Dean, there is a video on the channel, Understanding My Process, that describes what the PPMs are, and I need to go at one stage. I'm going to do a show just on the PPM and the webs and all of this stuff. Yeah, I am working on the Thinkorswim situation. That's a big deal for me. I need to get that done. Yeah, let's look at thanks JPM. I feel like my eyes are back on XLF. Okay, so yeah, the banks aren't participating, and it's interesting. I was talking with my brother the other day, and I made a comment about if you want to find out what's going on with interest rates, the last person to ask is a banker or a mortgage guy or any of that stuff. They always have, there's too much bias in there. And you've seen a lot of rhetoric coming out of some of these, some of these banks. And we're looking at this, these banks are just not in a good place with yields like they are. With zero yields, there's no way they can make any real money. The only thing that has to happen to get these banks to work is they got to figure out how to lend money again, and that's going to be the trick. For whatever reason, you're seeing a lot of activity. I did a podcast, I think it was back maybe in early March, and I was with my brother who's in the mortgage business, and we were talking about banking crisis 2.0. Well, it didn't happen because it was literally the following week the Fed came out and announced that they were taking rates to zero on the short end, and they also took off all of the reserve requirements. So I keep telling everybody, just know that every dime you have in a bank has nothing behind it anymore. They've taken that off. And that's a substantial event. That liquefied the banking system, but it didn't make it for the banks to make any money. So JPM here is actually turning around. We got some pretty negative. We've got negative PPMs, minus 0.215, minus 0.49. So in a downtrend, this is the weekly. If we go to the daily, we might maybe see some consolidation happening. Yeah, that's what I expected. So right up to the 200-day moving average. I talked about this a couple of weeks ago when a lot of stocks hit their 200-day moving average and rebounded back under them. And so nothing there. Let's go to XLF. Let's look at a couple. Similar patterns here, just like JPM. There's very little that's going to be different on these things. They all look the same because it is part of the industry. I don't think this thing collapses here, folks. I think it just goes sideways. And somebody mentioned something. I'm just going to throw stuff out as I set things up as we go through this live stream. Is I think there's a potential for a airlines 2.0 trade, and we'll take a look at them together today. And I covered SPX about 20 minutes ago. So you'll have to watch it on the rebroadcast. But yeah, let's take a, so these banks aren't going to do anything. I don't think they're going to collapse. I don't see a major collapse happening. We could trade back down to the May lows maybe, but they're just not a participant in the markets at this time. There's just nothing there because they're going to exist. And like I said, if they figure out how to expand this economy, keep the real estate in going, start to lend, start to do some other expansionary type tactics in the banking system, then these banks will start to make money. But they're not going to make any money with no margins, 0.0. There's no money in that. So all right, let's do the world's most favorite stock. Let's do Tesla. Got to do that. And I talked about last night how we had spiked over the RTX on Tesla. You'll see here we were able to get above this. The extreme was 1363, 1429 print. We've come right back into that top end RTX. I talked about that. If we were to close on Friday above the RTX number 1363, then that would probably tell us we're going to get 2 or 3 weeks of sideways movement, moving back into the range that we were in previously. Let's take a look at the dailies real quick. Yeah, I also discussed this. If you notice, 2 days ago, we got a close above the RTX. 1269 was RTX. The high was 1377, closed at 1371. The rule on these grids, I can't wait till I can get these guys in your hands. I'm hoping I can get it on TOS and TradeStation as well. But when you get a close above here, it triggers a 2 to 3 day sideways to down. And typically it will come back towards the bottom end of the range. There's something else that's happening with the dynamics of going into this market grid. You'll see the grid flattened out all of a sudden. You got this red line below here is flat, and then we've got the top end. So what's happening is a very distinct trading range is being established in Tesla. And the downside is going to be down to the bottom side of the grid. We basically have already seen most of it. So if you didn't, the range today is 1417. You can see R1. I know you folks don't have these numbers. 1409, and we're looking at right now R2 1348, which we're pretty close to R2. We're probably seeing the range for today. Maybe if we go through there, we could print down to 1326. But I think what you'll see as we go forward is you'll get down toward this 1326, 1307 number, and then you can probably play the other side. This thing is going to get locked into a range. Look at PPMs, plus 0.321, plus 0.186, plus 1.45 PPM 1, 2, and 3. These are kind of numbers that are going to be driven by the moving averages, but this thing's exploded at such big numbers above the moving averages that they're not even relevant in this current pattern. I don't think there's much more to be gained from looking at the weekly, but we'll take a quick glance. And weekly, we started there. There's something else that was going on here. I just want you to see. You see these dots? Let me draw on a few things so you folks can see this. Okay, so if we we look at these dots here, you're going to see these are three objectives, and they are over here on this screen over here. High target 1108, 1398, and 1596. Now these were generated when the prices were here, and I'll bring when I'm drawing, I can't get to give you that price, but this was generated some time ago, long before these prices moved. And there's something else that I keep talking about on the channel that you need to recognize is that I keep saying this, that momentum precedes prices. And you'll see this spike in momentum here on all three of these indicators. They almost spiked simultaneously, and then they contract. You'll see this contraction. What you'll see is when this happened, this was the prelude. We got this big dip, but then once we saw stabilization, ppm 3, 2, and then when we saw this cross to its first derivative here, I got a lot of lines going here, but this would put us up around here. And I'll bring up the WaveTech model so you can see on a daily basis where this came in and what's going on here. But this pattern that's set up here is projected these prices up towards this 1398. Now we went to I'm showing today 1417. I think we're a little bit higher than that yesterday, but let me take this off so I can go in and get the actual numbers. So these numbers were first generated on 417. So on 417, the projections of when the stock was trading 753, the targets on this thing was 1108, 1398, and 1596. So we saw right over here, we hit the high on 626 of 1108. And then we just saw recently the hit on the upper end of this range. As we went to 1429, we went just above that number, which is the 1398 number. So this thing has been, the Fibonacci projection going way back from April has been satisfied. Somebody said they're going to short the stock. There's probably a decent short. If this is the case, we could see the stock move back into the range and work within the grid. And I don't think this week's grid's going to be as important as next week. So I don't cover the individual stocks in my daily videos. I don't want to get into that. That just makes things too complicated. My effort last night in doing a live stream was attempting to save about 7 hours of my life. I think it was a fail from my viewpoint. So I'm not really that excited about trying to do that. Tonight I'll go back to my normal video presentation. I just felt those are much more focused than what happened last night. And it was an hour long, and 12, 15 minutes is watchable. So we'll go back to what's norm. But this type of a pattern is telling us that we're likely to come back into the grid. How far into the grid, it's hard to say, but certainly maybe getting toward getting back toward maybe 1172. So this thing's probably pretty darn close to a reasonable correction here. And this was one of those blow-off situations. We hit Fibonacci highs. Everything you can point to probably told us. So if you did want to sell it, this would be, let me back up to the daily. This would be your parameters to look to sell in this range I've been talking about, somewhere where 1352, 1370 to 1409, you can look to probably put some trades on at that level on the opposite side, with the targets of down at the lower end of this range, 1326.07. So there's a trade here. I don't think there's a long-term short by any means, but we could also, what I just discussed on the grid, we could see the market, we could see Tesla move down toward some of these bigger numbers on the weekly charts that I was just discussing, maybe back into. Let me just bring that up to make sure I get this right if I'm putting this kind of guidance out. That you're going to see move back 1245, 1172 is a possibility here. And let's face it, I must have saw like 6 stories this morning about how it was impossible to base any kind of fundamental analysis. You can't look at production. There's nothing you can look at Tesla and come up with a fundamental analysis. Talk about not being able to use fundamentals. Well, this was a classic. And there's been a lot of these, folks, over the years. There's a ton of them. I keep mentioning this Qualcomm trade. There were two trades that stand out in 1999 to me. It was Qualcomm going from 36 to 900. The other one was AOL. I remember getting a buy signal at all-time new highs on AOL at 105. I don't remember exactly when it was. It was sometime in 99, and the stock went from 105 to like 550, 400% move. That was nothing compared to the Qualcomm move, but there were just, these things are impossible, and there were no fundamentals. It was what I was talking about before. I guess maybe I've got a theme in this broadcast, is understanding the interpretation of the fundamentals is more important than understanding what the fundamentals are. And that is market sentiment. That's what I'll do another quote, and I put these out once in a while, but one of my mentors used to say, back in the soybean and the CBOT days, used to always say that the prices of soybeans were made in the mind of men, not in the fields. What he meant by that is, I don't care how many beans are out there or aren't out there, it's what everybody thinks out there that matters. So let's go ahead and go through some airlines here. I think this is pretty good. Yeah, Ram, I would love to do that. I'm working on this where we could have an alert. I'm trying to put together a database that you can put a stock in and you can see all of this stuff. I'm working on it. It's going to take a bit longer, but that's what we need. We need exactly that you get some kind of alert and email, text. It would be nice to be able to do everything. Yeah, and you can put the price alerts, Jay, just so you know, you have to go look at them. I mentioned this last night. Those of you using WaveTech, we're working on the solution, but we had to disable the email alerts temporarily just because we're getting, I guess we're just getting hammered. We're getting all kinds of spam attacks on our email server from the software. So IT guys are looking at that, trying to figure it out right now. And I would tell you probably, Andrew, I would short it before earnings. Actually, I would do the opposite. I'd be very careful. I don't think there's a long-term short here, but maybe that's what's coming here. Will be the thing that sets us into more of a sideways range, because earnings aren't. It's just what I said. It's the understanding of the interpretation of those earnings or those fundamentals that will be more important. So there's a lot of trolls out there on Tesla for sure. All right, so let's go ahead. Let's chug into. Hey, if you guys watching, is there a good symbol for an airline ETF that you know? Anybody out there? If you could give me that, that'd be awesome. I'll start digging into a couple. I would like to look at a basket of these things just real quick. What is JETS? I don't know a lot of these symbols. That would make sense. JETS, right? What a great symbol. Okay. Yeah, so this is weekly. Let's go to daily. Let's just see what this looks like. Yeah. Yeah, I think there's another trade coming here. I'm sure everybody saw the news on airlines that they're getting a bunch of money. And this was my whole premise going back when Warren Buffett sold the airlines. He sold the whole. And we used to, he was the bag man. And he sold it and was was wrong, but now a lot of these things have come back in toward those higher end of that range that we were in back in May. So these guys are not going bankrupt, okay? It's not Hertz. And these major airlines, the transportation system is essential to the world. And so they're not going to let these things die. So the question is, when they do a financing, what does it look like and what is the possibilities? But I think the possibilities are at least another shot at this 200-day moving average, and maybe it'll go over it this time. But this will also be the perception, I guess is the best way to put this, the perception of what's really going on with this coronavirus. Of course, everybody's going to hang on to the coronavirus right into the fall and the winter flu season. This dialogue's not going away. We'll just have to, there will be some absolute reality that come into play at some point in time. Hopefully a good reality. Maybe by the time we get to the fall, maybe there'll be some magic serum out there. There'll be a vaccine. Who knows? A lot of folks have been on that. I don't know. I'm trying to find the name. If you guys know, what was the name of that stock that popped? Novartis, I think it was. If you know the symbol on that, I'm not sure what it is. Jay, maybe you can look that up. So here we are on jets. I'm going to throw a model on this. Let's put a WaveTech model on it just to see what we got here. Let's throw a 1.2. So this is, those of you using the WaveTech tool, you can put jets in there and you can look for this. We can also just start to go through UAL. We'll just hammer through some stocks here. Everything's neutral right now. I think this next buy is going to be the one that you want to be on. Yeah, Frank, you're probably right. Oh, thanks. Richard Smith just got it. NVAX. All right, thanks. Yeah, that's the other one. This was another one. mRNA. That's another vaccine stock. There's a bunch of them out there. I got to look at OGIG. I'm not a Kevin fan, but anyway, we'll leave that alone. So anyway, these are things you want to watch. So if you're using WaveTech tool, I'll try to bring this stuff up. If I see these things starting to kick in, then I will bring this out. Like I said, I'm probably going to do another video on the airlines when it's appropriate. So I'm watching this stuff. We're looking at PPMs are still under pressure here, so nothing's going to happen with this stuff probably for another week or so, just so you know. But these are things to watch, and I'm going to do an advertisement. Listen, it's not a lot of money, but if you folks go to Kendall Report /WaveTech, that's WAVETECH, you can sign up for the tool. It will prorate for the month. If you don't want to go forward, you can click on a cancel button right on it. But I would tell you in the next couple of months, I think there's going to be a lot of good trades generated. I have intentions of bringing in someone that's going to help us put some option trades around some of these ideas. And I'm hoping to get that over the next week or so. And we should be able to have a lot of fun doing this. Okay, so let's go ahead and I want to show you something here, and I believe I have. Yeah, I want to go in on research, and I'm just going to put on daily on the WaveTech tool real quick, and I'm going to go to NVAX, and this was one of those rocket ship stocks. When you see a plus, that means it has a current position here, and on 3.2. I think the best one is 1.2 here. If we go to 1.2. Oh, yeah. It's the weekly that I wanted to show you. Hang on. There's a couple good trades there on the daily, but if we go to the weekly, this was substantial. You're going to see where my cursor is down here. Let me blow this up. You're going to see here that where my cursor is, there was a buy on this stock at $8, and it's still long. We printed. Now this chart has an update. I'm going to go over to the daily here. I'll go to the daily. Let me just drop daily 1.2 down. And you see this is the gap that we saw yesterday. Basically, if you look at this chart, and I'll go back over to TradeStation here in a minute, but just looking at WaveTech here, you're going to see right now the current P&L 165%. The last entry price was on this breakout. So we got in, we got out, and then the stock gapped. We bought the gap, and now we've got basically a breakaway, a runaway gap. I don't know if we'll get the final exhaustion gap or not on this as a classic technical stuff. But for sure, if you own this thing, you probably got to be looking pretty hard at this. You know, it's the same thing. We're going to put mRNA in here. And it is currently flat. You see that. Same thing. This is a daily model. It got. If we go over here and we go to the model overview, let's just look at the trade here real quick. The last trade made 100%. It bought at 29, sold at 58. So I'll go back up. You'll see that on the screen here. So it spiked out. When you see these runaway gaps like this one actually had the exhaustion gap, which was that move up to 80. When you see this kind of stuff, if you're lucky enough, you're using this tool and you see these kind of trades on a short-term basis, especially when there's this kind of emotional news around a stock like this that's so relevant, save the world kind of stock, getting the vaccine, all that stuff, that's pretty important. Let's just go back and let's go over here and let's put those same stocks in. We're going to have the same signals. I just wanted to show you that those were picked up in the WaveTech tool. So this is the same chart, looks a little different. This was the buy signal over here where the cursor is, then the sell, then the buy of the gap, and now we're seeing some pretty good selling here. They're going to want to fill this gap. If they fill this gap, this thing's probably done. It's another hype stock, and it's another vaccine stock. Somebody will win. Somebody's going to win the lotto on the vaccine. I mean, one of these drug companies, right? They're going to be the chosen one. And right now we're in the phase with the government is choosing the winners and losers. So that's what's going to most likely is going to happen. And exactly, and Andrew just pointed out that these guys got billions of dollars, so they've already been chosen. But that doesn't mean they're going to be the winner. You know, when's the last time the government did something right? Okay, so you see, look at the PPMs here. Massive divergence. I keep bringing this up. I'm going to draw it in again as we go through this thing today. Here's that expansion and momentum that I talked about. Momentum precedes price expansion. So we can see as we go up into these levels, and then of course we get this gap here. Secondary expansion here happened, and then you get, so if we look up here, the expansion came in here on the secondary, but it also was massive divergence. I mean, if you look at, we'll just draw it like this, these old highs, and now you're turning down on all of these indicators. This puppy's pretty much done. Doesn't mean it's going to zero. It just means this trade's done. And if you didn't, you might get a chance where it holds this gap and maybe trades up again. It could be more here, but with everything starting to turn down, these are very huge numbers on the over on the left here. I'll just draw them in: 3.29, 3.72, 3.19. These are the frothy numbers. You get there, it tells you that the probabilities are zero for the market to drop below the 10-period moving average. Guess what? 10-period moving average is $84. So that's a long ways away from where we are. Okay. I got to look at this other stock here 1 second. Okay, here's the O-Shares GI Internet Giants. So this has done pretty good. Right over here, you'll see that the WaveTech tool got a buy and a daily on this. Right here, put it up. At 24.22, it's currently 41. There's actually some Fibonacci objectives right now: 41.10 to 43.93. The high's 40.62. So this is definitely getting to that phase as well. You look at the PPMs, all 0.81, 0.83, 0.64 PPM 1, 2, and 3. So these are all very positive trend numbers, and we're seeing a real acceleration, which what that means is that we're likely to, if you look at where we are today, the RXT number 4072, high 4125, last 4120. If we close above that RXT today, so we close above 4072, you might want to jot that down. Then that's going to tell us 2 to 3 days to the downside, at least to the bottom end of the range, which is 39.34. Not a lot, but a couple bucks here. And depending on what the grid comes in tomorrow, that'll look. And those of you, when you look at these lines here, these are volatility. This is based on volatility. There's a look at the recent volatility, and then there's a Fibonacci grid that is developed within the extremes. Then all these numbers are related to Fibonacci numbers that match what's going on here. So you can see this is the daily range. If we go out to weekly, maybe we can see something a little bigger on this. Yeah, weekly, look at this. We're printing up at the top end of the weekly too. So you're seeing weekly extreme R3 4125. Look at the high, 4125 exactly. So if we've hit a R3 exactly on the internet giants. And yeah, this one's pretty easy, right? I'm not sure what the constituents are, but looks like it's probably the FANGs and beyond. So this is a definite good way to play that. I think there was a better way by just building a portfolio with the FANGs. Actually did pretty good on a short-term basis as well in the WaveTech tool. I think you would have beat this. But the bottom line is this is pretty much maxed out. And what it's telling us is there's a potential broad range coming. So maybe I'm just looking at we're back up 850 on the session on the E-minis right now. S&P up 1063, back at 56. There's still some more juice in this market, but as far as this week goes, this thing's played out pretty good. We haven't talked about the Nasdaq, but let's take a quick look at the Nasdaq futures because it kind of triggers me into that mode. Nasdaq futures right now, high 10,422. This is on a weekly basis, and we're looking at 10,343 is R3, RXT 10,491. So we get really close to the extreme projected for this week, and you're looking at the PPMs. They're all rocket ships. These are very powerful, very powerful. Yeah, what time we got here? Yeah, so we're in the final hour. Listen, I apologize for the snafu, and I'll figure out what's going on with this resolution. I've actually got it up on screen. It doesn't look too bad on my end. I don't know if they're, yeah, I see quality 480p. That's I don't know what happened here, folks. So it's not giving me any option to take it higher than that. So I see exactly what everybody's talking about now. All right. Let's get some more stocks. You guys are having way too much fun on this timeline here. Yeah, thanks, Brett. I see the Amazon, Microsoft, Google, Facebook, exactly. Yeah. Boy, isn't O'Leary smart to put those in a fund? Okay. Anyway, why would you pay O'Leary when you can build this in, and let's put those in. Hey, Jay, let's go ahead. I'm just going to go ahead and I'm going to go in here and build a portfolio. We'll call it OGIM. Or, what's the symbol on that? OGIG. OGIG. We don't have all the constituents, but let's just build something real quick, folks. This will be fun. I'm going to show you how fast this happens. So we'll go back to 2015. I'm just going to make it easy. It'll be easy for us to see. I'm going to put $1 million in this thing. Go next. And I'm sure all of these things are going to be what's in here, but this is what this thing's going to look like. I'm going to put in a couple of different combos. Matter of fact, I'm going to back up. We're just going to build this thing. I want to change it. We're just going to build it. We're going to do a 2020. We're just going to do it from this year. Just see what this thing looks like for fun. And we'll go over here and we'll put in Google, Amazon, Facebook, Softy, Microsoft. I don't know the other symbol on Alibaba. Is that just Ali? If you guys know that. Maybe it is Baba, yeah. I don't know. What else we got here, folks? I guess you got to put Apple in here. I bet that's in there. So we'll just build a very quick portfolio. I just want you to see what this thing's going to look like just for fun. And I'm literally just going to skip through here. I'm not going to explain myself at all. And we just built a portfolio. We'll just see how this thing comes out. It'll take just a minute for it to run. Okay. Yeah. Okay. Yeah, so this is what this thing's done so far. I didn't put very many. I ran it on a daily basis. There's probably a much better, but you can build these things, and we can look at what the open positions are. We can see exactly what the profits are in each symbol, when it bought, all that kind of stuff. Anyway, I just want to show you it's super simple. You can take those constituent lists that are in some of these mutual funds, these ETFs, and build some really cool stuff in here, individual stocks with no internal fees, none of the crap. And it's just so much empowering. But I just did a 2020 portfolio on this thing. So this was what is coming out of this. So we got, some decent profit on some of this stuff. It looks like entry date. A lot of this stuff didn't come in until later. But anyway, I just wanted you to see that for fun. All right, so let's do Walmart. We've been getting that one. Yeah, Walmart this is a weekly. Let me go to a daily real quick, back up. So if you notice, yesterday on Walmart, we had a big spike up. It closed above the RTX number yesterday. RTX was 120.54. It closed 126.95. That close signaled 2 to 3 days down, moving back toward the bottom in the range. You can see right now we're down 136. Bottom end of that range is we'll back into the grid is 125 to 122. The low today is 125.12. So we've just went just a bit below S1, likely to continue. The other thing that happened, and I talked about this on a number of these grid stocks when we're looking at the grid, they squared off. They went flat on the RXT, and on the bottom end, they went flat. So what that tells us, we're locked in a range. So 122, 130, 131 is the range the stock will trade in for the next several days. We should see at least one more day down, and then maybe rebounding if we hit the bottom end of the grid. And these grids update every day based on volatility. So they're going to expand tomorrow because if you look at, we'll expand in tomorrow's range. We'll get a slightly wider range, so it'll be interesting to see what that looks like. Unfortunately, we won't be live to show it to you, but as I mentioned, I am working on that as fast as I can. So anything else, Jay? Okay. Okay. All right. Yeah, I'm just Jay was just updating me on some things that you folks have been asking about. So I put up the Dow Jones. Elton, I know you were looking for that. There's some interesting numbers here. Now I've left the cycles on here. There's been some cluster of cycles coming in lately, which are most likely bottoming cycles. You'll also notice up at the top here these dots, and when I bring up the prices, you'll see here the projection for the Dow Jones right now. This is off a daily, is suggesting that we're going to go to 29,633, 31.32. A lot of times we'll get these kind of high-end projections. They won't get met, but on the downside, it's very tight. The downside low targets are, there's two of them right now, down to 24,850 is probably the lower end of this. PPMs are kind of fading a little bit. If we go over to weekly, you'll see similar pattern, but we're getting, one stage I'll bring you in and I'll start teaching you folks about some of these patterns. And this is what I call a dragon pattern. And so this, we're going to stay in this grid, just like I've talked about on these other indexes. Some of these things like the small caps and the mid cap stocks are way underperforming as we go forward here. So there's not a lot that you can say about some of these indexes. Will they catch up? Will the ratios come back in? Well, that's yet to be seen. That's a little more difficult to come up with. But the bottom line is that we're looking at this range to continue, which is the top end is 27,234, bottom end 24, so it's wide. But this week we did get up to 26,297, and we just went between R1, R2. And I haven't watched these numbers real close. I really don't look at the Dow Jones much at all. I haven't for about 30 years. So, but sometimes there's some perspective. And, you know, one day I'll go through some things, but I'll just bring it up right now. If you look at the S&P index, there's 500 stocks in the S&P index. We have a strategy in the WaveTech model that we've maintained since 2000, and when there's a new constituent change, something comes out, something goes in, we update those and we authenticate those and walk them forward. The reality is I think, Jay, you probably know this number better than me, is probably, I think out of 500 stocks, there's like 447 stocks are new over the last 20 years. Yeah, so there's like total symbols inside of the S&P 500 is like 930. So a bunch of them have been changed over the years, like most of them. So that index isn't the same. It's just a similar situation with Dow Jones. And the Dow Jones is run by committee. It's owned by, operated by McGraw-Hill. And, you know, they're always trying to put stocks in there that are going to, you know, that are trying to promote the Dow Jones to go higher. You know, it used to be the industrial average. You know, that's not what it is anymore. All right. I don't think there's, and you can see the only index, as we know, if I'm going to throw up NASDAQ here, the only index, you know, this is the safe zone, right? This is the new economy versus the old. Even though there's some of these stocks that are in there are part of the big high techs, you got the Microsofts and the Apples in these indexes. The S&P reflects it a little better than what the Dow Jones does, for sure. I haven't. Let's go to Bitcoin. Last couple of weeks I've been covering Bitcoin. We're still working on getting our crypto offering in the WaveTech tool. But these signals that we're seeing, we just got a buy like 4 days ago in Bitcoin. I'll show it to you here. We got a buy right here at 93.01 on 7/6. So 2 days ago. and we're printing right now at 94.21. The intermediate patterns on Bitcoin are extremely bullish in my opinion, and we don't, on this particular platform, I don't have any really long-term data. I might be able to bring it up on our other platform. I think it's not fully up to date, but I think it's close enough. So I'm going to bring that up real quick on my other screen, and then I'll slide it over once it's over there if I can find it. So Bitcoin, we had a couple, just reviewing some of these trades. We had a trade at 66.24 on 4/1. It sold out over here at 87.15. Then we got another buy over here, only lasted for 1 day. It got whipsawed, stayed out for the last week or so. Now we just got a buy on the 6th. And there's no Fibonacci targets on here, but we're just hovering for a while now, going back to this. This is a daily going all the way back. For the last several months, we've been just hovering just above the 200-day moving average. And you folks, I've been a Bitcoin trader for many years, and you folks may remember that we thought it was going to be like this risk-off trade. It was going to be non-correlated. And unfortunately, it's as correlated as they get. You know, it pretty much goes with the stock market. It doesn't really have any non-correlation. You can see the decline in March and lots of liquidation. And when you get into those kind of scenarios like we saw in March and mass liquidation, it's any asset that you can raise cash for is going to be sold. But right now, this thing looks pretty good. The PPMs are very positive. We're looking at PPM 1, 0.25, 0.14, and 0.06. But you can see their PPM 1 and 2 have crossed over first and second derivatives. So let's go to the next level. This is where I think Bitcoin gets exciting. So we look at this pattern. We got an intermediate buy at 82.66, back on 5.10. It's kind of drifted sideways. PPMs are still positive, but in this configuration mode. So when PPM 1 starts to turn up, and that's probably going to take a close above 95, 9,700 on a weekly. You can see this contraction on the grid here. Typically, when we get a contraction like this, we'll start to rally out of here. I'm going to draw in what I think is possible here, and I've covered this a couple times over the past several weeks. So this pattern here, this is what I think is happening. I think we're going to move higher, a lot higher. I think ultimately I'm going to draw a line across here. This is basically the retest of the all-time highs. These lines aren't perfect, but I want you to see these dots up here. These are the Fibonacci projection. Even though they stopped calculating, I believe these values are telling us where we're likely to go, which would put us up, and I'll bring them up in a minute. But this is likely what's going on. And remember what I've been telling you. Momentum precedes price. We got a nice momentum spike here. What we're likely to see is, I'm just drawing in some potential lines from the PPMs. I get this right? Yeah. So what I expect these things to just kind of go into what I call trend maintenance mode. Over on the left over here, you got 0.75. And what this is telling us is that once we can break above that 90, it's around 95, 95.50, 97.50, we get above that level, then the 10,000 number that we saw, that I think it was around 10,000. I'll bring up these numbers. When I'm drawing, I can't get to the data. It freezes my screen. But that number, once that number is taken off, then this swing objective that I'm showing you here is what's likely to happen. And Jay, I know you can hear me. If you could mark, we should have done this earlier. If you could mark what the timeline is right now so we can put it. Andrew did something really great for us last week and marked all the times when I was talking about different stuff. But if you could mark that time, that'd be awesome. So anyway, folks, yeah, so this is a pattern that is likely to unfold here in Bitcoin. So let's look at these numbers. So that high was 9,911 was the high on that pattern. So close above that, let's say close above 10,000 on a weekly basis. So this chart kind of shuts off on a Friday and starts over. I think it's Friday. I'm not sure when these things roll over. I've got to look at that. But the next weekly rollover, we get above 10,000, we start to sustain over 10,000, then we're going to see these numbers up here, which are 16,949, 20,967, 23,448. That is an all-time high. This is not going to happen overnight. This is a multi-month, maybe 12, 18 month kind of trend we're talking about here. But these things tend to go pretty fast when they explode. We know. I remember when it printed the all-time high, and way over here on the far left, I'll put a bar on there. You know, we just had this huge reversal, and it printed. I remember it printing like 19 and change, and literally 3 trades later, it was 17,000. I was on the phone with somebody. I go, that was the high in Bitcoin right there. That was it. And when you see that kind of drastic price movement, and like we saw as it continued through, that's exactly what it was. So the patterns are bullish. I don't think I have enough data to do a monthly, but let's just take a look at it and just see what comes up. Yeah, not really. The grid tells us a little bit about some of this stuff. The grid for Bitcoin probably, R1 is 96.59, R2 245. This is for the month of July, 10.830, and then 11.354. On the downside, we fell just short of hitting at the lows, been 89.21, S1 86. That's not going to happen. And we're likely to stay within the range. I would be surprised if we were able to get above 10,245 for this month. But we do have this configuration that we're seeing on the grid is also suggesting a range of 11,354. I think S1 is probably the worst case in this pattern, is down around 8,600. But I think that's out of play at least until we see how this month trades and goes from there. So went through detail here on Bitcoin. So I'm gonna see if I can bring it up. I've got our expert platform up. I just want to see if I can bring something up real quick. One second, bear with me. Yeah, at least I'm going to be able to bring in a larger view. I'll bring this up here. So now we can see this is actually a daily chart. I'm going to change this over. I'm going to change it to candlesticks here, and we'll we'll just start to walk this through real quick. So you can see this is a good view of the candlesticks, what's going on. But as we get out to 5 years, this gives you a pretty good view, and this is what I'm talking about. This level over here is going to be a critical level, which is 13,311. That goes in line with some of the numbers we were talking about. And this is obviously got the charts, got the PPMs on the bottom, those type of things here. You can see all the values there. So we're starting, like I said, we're starting to see some breakthrough on this, but not a lot from that. But I just wanted you to see the longer term. If we go to a 10-year, you can see this big spike, the trough, and now I believe that first stop is going to be that range that I talked about is that level. So anyway, just want to bring that perspective in. Yeah, Douglas, you're talking about a dilution split. I know the miners have been compromised pretty substantially and everything. I'm going to go and let's move forward here. We're going to IWM, which is the Russell. This has been a dog, and I'm going to do two things in looking at the Russell here. See, we actually have some Fibonacci projections above the markets right now, above this range, and that target is the high target's 169 to 183, 191. So that, as I discussed earlier in the broadcast, I think when the small caps kick in, this is when there's going to be this move that I'm talking about into the election where the S&P and everything moves higher. I wouldn't be surprised ultimately we see much higher number on the NASDAQ than 11,000, but I'll wait for those projections to come into play. But this would be projections on a short-term basis. We go over and start looking at weekly on this. There are no projections here. We did get a buy on 6.5 on a weekly basis, PPM1 plus 1.2, but this same configuration that's on the S&P and the Dow Jones and all the other indices with the exception of the NAS, because the NASDAQ continues to be in this runaway, making new highs. But this is a setup, I believe, to the next level. This consolidation just to below the 200-week moving average is significant. The other chart I'm going to bring up here is these two charts here. One is on a shorter term basis, one's on a long term basis, and this is an issue here. This is the IGR, which is similar to that index. This is the small cap index versus the S&P on a monthly basis, and we just keep punching new lows. I remember where my cursor is here that I was thinking that maybe we got a bottom there. We didn't get the bottom there. It was a whole nother leg. At some stage, this thing will start to bottom, and when we start to see some overperformance on these, this is going to tell us two things, in my opinion. The first thing is that the economy is going to start to come back, and the smaller U.S. companies are going to come back into play, and folks are going to be able to see that. That's when you'll see market sentiment switch, I think, substantially, and that may not happen for a while. I'm not predicting that's going to happen anytime soon, but this chart certainly That's the event that you have to watch for. It may never happen. So you may watch for it and it never happens. This here, I believe, is the weekly version of that chart, maybe daily. Let me just look here. Let's put it on daily. Yeah, so this is daily. And if we go over here and we switch the time frame to weekly, you'll see that it's trying to etch out some sort of bottom here. We'll see if it does. But this, and I guess I've said it multiple times during this broadcast, that this is the thing that's going to make market sentiment turn. And maybe maybe we have to have a vaccine. Maybe there has to be something that is going to convince market participants, whoever they are, to buy into this U.S. economy turning around longer term. The small cap stocks will be that message. It's easy. The large caps are surviving. That's where the money's been. We know about NASDAQ. We know about all these other indices. But this is, in my opinion, this ratio is what's going to be key to making everything work and everything changing market sentiment on a longer term basis. This may not be for a while. If you look at my reference, and again, go back and watch Sunday night's video, and at the very beginning, I covered the secular trends, the secular configuration. I saw a comment that what I'm talking about is 4 months up and 7 down. Somebody said there hasn't been more than a 3-month decline for 10 years, which maybe is true, but that doesn't mean it can't happen because it hasn't happened before. Yeah. Yeah, see some comments. I'm so glad I can see this again. Let me go back over here. Yeah, we're looking at SPX printing up right now as we're coming into this final half hour. We're looking at it printing back up toward the highs, 3171, back at 3166. Like I said yesterday and last evening, this market's not going to decline here. It's not going to happen. Another buy the dip opportunity from that standpoint. This is a weekly graph we have here. Let's throw up a 5-minute chart. 5-minute, we got a wave tech buy right here at 31.55 on cash. Let's see if it picked up on the futures. Futures got a little earlier buy, bought at 31.4250. So this is off of a 5-minute graph. So I'm looking forward when I can get this stuff in your hands and we can start talking about how to use the short-term models to trade as well. And interesting, I want you to notice these dots here. These are the cycle bottom. We got a cycle bottom on a 5-minute chart right into that low. And now we're getting some things come out here. We got a cycle high print so far. That's been the high at the 58.50 level. Last 54.50, so it backed off of that. And we're operating just like everything else, folks, I've been talking about. This is operating within the grid, and the grid is showing us what the ranges are likely to be for 5 minutes. 3160, 3152, last trade 56. We look at S1, 3155.25, and let me just see where we are here. 54.50. So we're just below. We went just below no, I take that back. 30. I'll get this right. S2, 3154.25, low 54.25 for a 5-minute basis. So we're trading right now at at the S2 number. We'll see. We Yeah, so we're printing S3 now, 53. Maybe we'll go down, but now it's bouncing. That was probably it right there, just looking at this action. So even on a 5-minute chart, this grid is magical, and the same kind of rules that we see. That if you look, I'm going to point over to this point on the chart. We closed above RXT 3145, 2 to 3 bars down. We actually started that little mini decline out of that pattern. I've got a very good friend I'm going to be employing here to take this grid and see if we can put some sort of short-term trading model or some kind of trading model off of the grid. It's could be very interesting, and it'd be very isolated trades. I just got to figure out how to isolate them and how to define them. Anyway, but this is 5-minute graph. We're seeing this thing drift lower here. PPMs are all positive. Everything looks good here, and we'll see if we can keep this bid into the close here. As we saw yesterday, that last half hour was brutal. We're not seeing that today, at least so far. We're not seeing any massive selling. If anything, we're likely to see this thing bounce a little bit into the close. We're looking at futures 62. I'm going to go to cash here real quick, and the cash is trading just below the 200 period moving average on the 5-minute chart. We just went above it, and we can see we've done this a couple times today, where we rallied up earlier, and now we're just trading around it. But we've got a positive PPM 1, 2, and 3 here if you look at the formation down below. So we'll see if this thing can push into the close or not, and go from there. Okay, I'm just looking at the line. We might as well hang out for another 15 minutes. We'll finish into the close. Watch this together. Yeah, so I have no idea if we've had any super chats, but if you guys are on, let's pound that like sign, and let's get these likes up. A couple. Go ahead, Jay. Okay. All right. Yeah, I think actually I magically got 2 streams going again, by the way. So if you're hearing this and we're not answering any of your questions, we had a snafu. We can only get 480p to come out today. Can't figure out if it's a setting in OBS or what's happening here. So apologize for that. I'll figure it out by the time we do a next live stream for sure. So we're seeing back to 64 here. I don't know if we're going to be able to print into new highs. I think that the numbers that we talked about earlier, the grid is going to hold up here. Let's go over to the day trading screen and just take a look and see if there's anything here. Not much. We are getting what I call a dragon formation. It looks like we're going to get some selling to come in here. If we have to print above 56.25 here in the next 2 minutes, or we could see some selling come in. There's something that's on the screen here that's called a rope. And if it continues, if it doesn't get a break here, like I said, in the next 2 minutes, then we're going to see possibly some negatives. It's pushing up here. That's good. But we're going to have to get above that 56 level to really get it through. They just hammered it back down. Looks to me like we're going to see a bit of selling come in here as we come into the close. We got 15 minutes to go. It's at a very pivotal point right now, but this formation that's setting up is potentially negative. How far would it go down? Maybe down to 50, as possibly as 48, but we still got to get above that 56 level. There's a war zone going on right now. If you look on the far left, you'll see the level 2 and the bid ask and everything that's there, so you can see what's going on with the futures. And I would tell you something. We've had 1.3 million traded in this sessions. That's pretty good. Yeah, here we go again. We're trying to get this thing above above the rope. If you notice over on the chart, all of these linear regression lines are very tight together, and that's not necessarily a good sign. We need to get some sort of expansion. Like I said, 56 or better is necessary to make that happen. Otherwise, we're going to see some selling, and it's starting to come in right now. We should see some selling down into 50 or so. And that's the one thing I also want to do is for those that want to day trade E-minis, we're going to do at some phase, we're going to do an entire session, maybe multiple hours, where we just go through and do trade setups and talk about trading. So if you would like to see something like that, let me know. That's funny. Okay, so yeah, look at this. Here we are at the 56. We just popped it. So I guess you guys must have hit the like button so it won't crash. Yeah, so we're just kind of hanging out. We can do that. Yeah, that would be good. I think to do a day trading session. There's so much, man. I'm telling you. I don't know if anybody out there. I'm just going to put it out there, and you can send an email to me at info@kendallreport.com. If anybody knows any programmers, anybody that knows TOS really well, I would like to talk to them and see if there's a way to get some of our indicators and some of this stuff out there. I need that contact. I don't have that right now. Yeah, Enrico, great trade at 3,007. That's a good trade. I think our models are long from 2840. Yeah, I think 3214. It just depends on what your time zone is on this stuff. You know, if you're looking, I think we're going to see a continuation to the upside, but 3214 is likely to represent a short-term high, and those are one of the things I'm looking at right now, and I'll be covering that on the channel on the nightly videos. And as I said before, I'm going back to the old format. I absolutely hated last night. It was cool hanging out with, quite a few people. Actually, when the video went live, I think there was 1,700 people watched it when it went live, and so we got a big spike in viewers, but then it just faded out. I get what attracted you folks to me on that daily commentary. So it was. So what does TOS stand for? Think or swim. It's a TD Ameritrade. So we're still printing up here at this 56 number. It's kind of struggling here. We're up 18 handles on the E-minis. I'm going to flash back to this other screen for a second to see where cash is 64, 42, 88. So we're starting to print up a little bit. Let's go back to the day trading screen. Yeah, it's just a war zone here. 54 to 56. We just traded all the way down at the bottom end again. I mean, this thing's flopping around like a fish out of water. There's not a lot going there. Yeah, Samuel, I think you're right, and that's what's hesitating me from doing anything with TOS, because you got to put your source code out there, and that's one of the things I don't want my source code out there. So that's why I've been trying to find out if there's a way to protect the code, and I'm not sure there is. Yeah, here we are. We're printing down at 53. Like I said, it still looks like to me they want to print this thing down into the close. We got 10 minutes to go. There's definitely some selling pressure. Here's 51, 50. Yeah, it's been a nice short up there for a scalp. You got to be nimble on this one. But like I said, we could see a 48 print. We'll see how this thing acts. We're right back in 53. So lots of activity coming in this last 10 minutes. So it will be a war zone. And the one thing I was going to point out here is we're looking at on the far left here, and you're looking at the contracts, and you can also see on the right-hand side where the histograms are moving around. That's a liquidity meter, and there's pretty good liquidity relative to what we saw back in the crazy days of March and April when we were seeing these massive moves everywhere. There was no liquidity. Sometimes there were 3 contracts. To get 40 contracts, you might have to move 200 points on the S&P to absorb 200. So the markets were getting moved around on air. So do I need a custom script? J Legend, yes, but it's got to be encrypted. So, like I said, send me an email if you think you know of or anything that has anything to go that I can deal with that at info@kendallreport.com, and just be very descriptive on what's going on there. Yeah, Enrico, I see your comment there. That's absolutely what I was talking about earlier. Is people just want to work. They don't want universal income. They don't want to be paid to do nothing. They want to work. That's the bottom line. So we printed down to 50. Maybe that was it. We got 8 minutes to go. There still seems to be some downward pressure in this thing on a short-term basis. The range right now is 50 to 56. Looks like if they can print them back above 56, maybe they can get a run coming into close. Maybe they'll scare some of these folks. I think today's action has been pretty neutral overall from the standpoint of what we've been watching over the last couple hours. And, we've just stabilized in this range, and there's not a lot. We used to use the term a lot of VIG, not a lot of momentum on either side of the markets. We've just been grinding out. Yeah, it's funny, Tobias. It's funny in the movie that Eddie Murphy, and Trading Places. on the scene of that floor. I have 4 really good friends back in the day that I got a call from. They were in the gold pit. Those were actually real traders on the floor, and they came in on a Saturday and did a mock trading session for the movie. And Joe, what was her name? Kathy and somebody else was on friends of mine that I knew that I used to trade with. And anyway, they were all excited because they got to be in a movie. Here we go. We're printing 56s again. But yeah, that was pretty cool. Yeah. There were some crazy days. Maybe someday that we could tell stories. I've got a couple of friends that would be fun just to get us all on and tell war stories from the 80s. There were some crazy situations that went on, especially 87 crash. And even going back to, I have a video somewhere out there that I should probably put out. Here we trade all the way to 58, so they're getting happy. We've turned this thing up. And if you notice on the market grid is starting to expand as the volatility is expanding, and it's also expanding to the upside. So now we can see a range all the way up to 6150 is the top end of the bands right now. So we did get a little bit of a bid coming into the close. They were able to hold that 50 level absolutely solid there. And here we are coming into 5 minutes to go. And a lot of the action that you'll see, since we're hanging out here and just kind of chatting, a lot of action that you're going to see on the close. If you notice the numbers on the far left side on level 2, it's 20, 40, 80, 100 contracts. When we get into the final minute, you'll see these numbers go very liquid, and then you'll see a hesitation. And then when it reopens, which is about 30 seconds, you'll see all kinds of activity from, you kind of get a bias of the traders for the day if we get further short covering. I think that folks were somewhat negative coming into this morning. And that's why we saw a lot of selling come off the highs. We printed the highs early in the day, and then we sold it off. And here we are pretty darn close to the high of the session right now. Yeah, and there does always seem to be a bid, and that's the market sentiment that I've been talking about. Yeah, so we're working on, somebody asked a question about WaveTech. Can it be used with options in a small account? It's probably not going to be really good for that, just depending on what small account means. But, you know, we're going to address some of the options trading ideas and stuff, and we'll see what we come up with. So keep watching. These events on Wednesday are pretty good. I thought it might be cool to do these evening sessions, but I've got to get focused to get the message out for the next day much better than I did last night. So here we are, 58.50. We're coming in. 2 minutes to go, so we're starting to see some activity pick up as we come into the final minute and a half. And it used to be my favorite thing when the 5-minute bell, 1 minute bell rang, and then the frenzy that it always created. Of course, now we actually don't ever close. Yeah, Scott, you have to follow me on Twitter to get the ES numbers every night. I put them up. Usually I will take a break in the afternoon, then come back. And when I come back, I'll post them. Sometimes I'm in on the reopen around 6:30 New York time, sometimes a little later than that. I try to get them up whenever I'm around. And like I said, the real key is going to be getting these things on trade stations so you don't have to wait for me to do that. And yeah, in the community area, I think I showed that earlier. We'll watch this close. We're coming in. Yeah, I know. Listen, I hate Twitter too. It's ugly. But if you follow me on Twitter, it's actually a good place to get some information out there on a timely basis. We actually, once upon a time, had a Twitter account that would automatically take signals from the platform here and actually put them out on Twitter in a real-time mode. And we haven't used that for a while, but I just happened to think about that. That might be something that we can put out there again. And we've made it a closed, you had to get approved to get in. So I'll have to look at that account. It's still alive. I think we still have the process. I just have to set up a couple of things internally here to actually broadcast these things. And I'm also working on some things with being able to do a radar so we can watch a lot of stuff at one time. Here we go. Final minute. We're seeing a bit of a bid come in. Watch the activity here on the screen. Look at this. You'll see it start jumping around big time. There we go. That was a close. We'll hesitate here, and now we're back on it. Here we go. Look at this. Everybody was short. They're covering them up. New highs on the session as we print here. We'll see what kind of activity we get. But these are all the mutual funds, institutional folks that were trying to cover up by rebalancing a lot of mutual funds and ETFs. That's what you're seeing here on this end of this activity. And so there was a little a bid there. We actually printed a new high in the futures for the day. Let's take a look at the cash to see exactly where we finished. So we went out very near the high of the session, 3170. 3171.80 was the high of the session. We finished 3170.04. So this is the opposite of what a bunch of folks were talking about on the channel last night, that we're going to collapse and all that stuff. You know, please stay active on the channel. I absolutely love the comments. Like I said before, you can disagree with me. That's fine. I love it. You have to remember, I grew up on trading floors. You don't think anyone disagreed with you? Everybody that traded on the other side of you disagreed with you. So if you were buying, the other guy was selling, he disagreed with you. So, you know, I'm pretty thick-skinned. I just don't like to be called names. So, but you can disagree with me all day long. I love the debate. No, I haven't gotten any big debates on these things. Yeah, you got to get back when you can, Tobias. Listen, man, all you folks again. I hope this isn't corny, but I know a lot of these names that I'm seeing here. You folks show up all the time. It's amazing. We've been doing those of you that have signed up for the WaveTech tool we've got an entire group of people using the process now, really getting involved. There's going to be a lot of stuff we're going to continue to do with the community that I think is going to be really excited, because it only comes from this community, and it grows if we can figure out how to make money together. And that's really what I'm trying to do for everyone. Yeah, we'll have to do Samuel, we'll have to do a whole day on trading floor stories. Poor Jason will be brutalized because he's heard all this shit so many times, but and also Mason, who's another guy, he's heard all the stories. And actually, if I can get a couple, I actually have solicited, there's about a group of 6 people that were all ex-floor folks, and we all have stories. We can change the names to protect the guilty. That's my favorite line. Not the innocent, but the guilty. And anyway, it would be a lot of fun. I've got some buddies that I would love to bring on and just open Joe Rogan style, right? Just let it fly. It would be a lot of fun. So I still want to work on that. I actually own a URL called the rogueadvisor.com. I haven't figured out what to do with it yet, but I think there's a whole venue. I've got some interesting ideas. Yeah, I appreciate the last comment on a ton of scalp trades, swing trades. Wave Tech Tool is wonderful. Once I got the right side of the trend and followed up the technical analysis, that's good stuff. Yeah, there's man, I'm telling you, we've got folks that have used this thing for 20 years for managing money. When you figure out, somebody made a comment, I think it was last night, that there's been some great things come out of the sell orders on, especially on the short-term sell orders. There's been some really good trades come off of that, and you know that's that's why I wanted to put this thing out to you folks, is to generate these ideas. I mean, to pay for this thing is not even, it's not even a bad trade for one. But if you get one good trade, it'll pay for a year, no problem. It's $97 a month. So, and we're doing these weekly Wave Tech meetings. I'm hoping that this coronavirus bullshit is over. And what I want to do is next year, maybe next spring, it is actually have a complete, as do a conference. I'd love to get like literally a couple thousand of us, do breakout sessions, bring in a whole bunch of people on options, and really put a really cool event together. And I'm hoping that they allow us humans to hang out again together. Yeah, so we've got a bunch of stuff. Yeah, I think you're right, Scott. That is the new proxy for the wall of worry. That's exactly right. That's exactly right. Yeah, man, I don't want to get in there and get into that kind of stuff. You're right, Jay. Yeah. Yeah, I'm going to say this again. I'm getting ready to sign off. I really appreciate it. Apologize for the 480p thing. I'll figure this out. I use the exact same settings I used last week. I don't know why we can't get above 480p. It's not as clean as it has been. It, so I'm not sure what's going on. But we will definitely get that fixed, and we'll continue to do the Wednesday live stream. Tuesday is going to be the Wave Tech stuff. So once again, hey, I'm gonna pitch you guys again, but sign up for the Wave Tech tool, man. It'll be worth your while, and there's just a lot to learn, and how to absolutely be able to bring in some amazing trades. And when I get this market grid out to you folks, it's going to be insane. I've actually sketched out what I want this thing to look like. You're going to think you're driving a Ferrari when I get this done. I want meters. I want all kinds of donut charts and all kinds of really cool stuff. A grid that lights up when numbers print. My plan is to potentially have 5 and 15-minute reversal bars identified right on the screen. I'm working on a bunch of stuff, so I will figure this out. I've been doing this stuff a long time. I've been automating trading process forever and ever. That Jay mentioned earlier, I saw on a chat that he's been working with me since 1992. That's when I started a company called Market Mind, and Jay and I are having a lot of flashbacks. I can tell you, coming back into that was a retail offering and everything. You're welcome, Andrew. And I I really want to get this. This was what I wanted to do in 1992, but we had no venue. So YouTube has given me a platform. We're continuing to grow. I know we're over 16,000. I think we'll hit 20, and I think somebody said I think we'll be at 100,000. And the goal of this whole community thing we're building here is making money. I'm not a hype artist, okay? I've been dealing with serious money forever, institutional money, managing assets, protecting wealth. When I say that on my nightly video, which I obviously didn't last night, it is what I believe in and what I do. So thanks a lot to everybody in this community. I really, it's way cool. Anyway, I'm going to sign off. Thanks again. Sorry for all the snafu at the beginning. It was amateur hour on YouTube for me. I just don't know this OBS platform like I need to know and how to reset things, but I figured that out. I'm pretty sure we had 2 streams going again today. So I'm not even sure which one I think I'm watching the right one because I'm getting a lot of these folks. Anyway, yeah. Okay, yeah. Anyway, folks, thank you. Thank you, thank you. Regular video tonight. We'll see you later.